Well, budget's in the air here in Nigeria, and hopefully we'll be able to go through the processes and get the budget assented to by 31st of December, which is the plan, so implementation can start in January. At least that is what the Senate president said. But, well, let's talk about some other data now, which came out recently from the NBS, showing that perhaps it is good news, and I say that with a pinch of salt. We'll delve into that to find out if really it's good news, as Nigeria records 1.8 trillion naira surplus as foreign trade jumped by 60.7%. The total trade conducted between Nigeria and other countries increased to 18.8 trillion naira in the third quarter of 2023. That's according to reports by the National Bureau of Statistics. It shows that there's been an increase of 60.78% higher when compared to 6.474 trillion recorded in the second quarter of 2023. However, and this is the pinch of salt, the increase is connected to the devaluation of the country's naira, that's the currency, even though, of course, there hasn't been any official evaluation of that, but we all know what's going on there. And so that made the value lower value has gone down as goods are denominated in dollars cost even more. Well, let's get the nitty-gritty of this. Joining us virtually is Mr. Kalu Aja, a certified financial educator, also a financial analyst, joins us virtually. Mr. Aja, thank you so much for your time. Good morning.
Good morning. Hope you can hear me. Nice to be here.
Yeah, great. So on the surface, this looks like good news that Nigeria is finally recording surplus in trade. It's a positive trade balance. But in reality, help us to understand, is it really that good?
Yeah, well, the numbers are good. I mean, we've had a trade surplus now for, I think, 4 quarters. So trade is expanding. We're exporting more, we're importing more, but we're exporting more. So we have a net surplus on the export side, which is good. So overall, the picture looks good. When you look underneath the number, that's when you start to get some concern, some of the composition of that import and that export. And like you said at the beginning, the role that the exchange rate difference plays in boosting the naira figures vis-a-vis dollars. So that's where you now start to get some road bumps. But overall, it's good that we're exporting and exporting more. It shows trade is happening, maybe jobs are being created, and all that is good for the economy.
That we only see this surplus in number because the value of the naira has reduced, which obviously makes same volume of trade, but because, you know, the dollar is now more expensive, that gives us this number and not real surplus.
It's a real surplus, right? Because we also import and we also use the naira that is devalued to also import. So they net themselves out, you know. So we export, like you said, in dollars. We also import in dollars. So net, naira will knock off dollar, and then we still have that, should we say, surplus in terms of exports. Like I said, the real problem is what are we exporting and what are we importing? Our number one export is crude oil. Our number one import is PMS. So it just gives you that picture that, listen, we're exporting the raw thing and bringing in the finished goods into the country. Agricultural exports are more or less non-existent, only about 2 billion or 2% of that whole picture. So very, very little exports. We're exporting raw materials, bringing in finished goods. That's where the picture starts to look pretty bad in terms of the trade figure for Nigeria vis-a-vis other nations.
Yeah, so you talked about what we are exporting, and we've been talking about the issue of diversification, which is obviously what the country needs. Crude, we see the export was above 82%, and our baby agriculture, which we pride ourselves so much with locally, we say employs a huge number of, especially smallholder farmers. We see that agriculture's exports is just about 2%. So that means that this talks around diversifying the economy still hasn't gotten home.
You're correct. I mean, agriculture is the number one contributor to Nigeria's GDP. Also number one contributor to employment in Nigeria. But as you can see from your figure, in terms of trade and earning forex, it's nothing, it's 2%. So the bulk of Nigeria's foreign income is coming from crude oil. And crude oil, as a share of our GDP, is very, very low. It's less than 15%. So the economy is sort of not balanced properly, where the largest employer of labor, the largest contributor to GDP, doesn't generate forex to us. And the largest, the very, very tiny falling share of our GDP, which is crude oil and gas, is generating a larger share of forex to us. So the problem is really that we're not trading. It's just that what we are trading isn't generating forex. And because Nigeria imports a lot, we then are in a big problem because we need that forex to drive not just trade, but even the GDP of the country. Hence, that picture is really unsettling that it's just 2% agricultural export, which is the largest base of our gross domestic product. Not good at all.
Comfort ourselves that agriculture is taking care of domestic demand. Can we use that?
We could, but again, look at agriculture. Look at that space. Fertilizer is imported. Oil plants, water pumps are imported. The seeds are imported. All these things we don't import in Nigeria is the rainfall and the land to make the crops, right? And even on the rainfall, like I said, the water pumps are imported, the fertilizers, the chemicals are all imported. So still, when you go granular into the whole agricultural space, you see that this literally, we're not doing mechanized because we can't afford it, because it's dollar-based. So you come back to this lack of dollar because we're not really trading from the biggest share of our GDP. Imagine if agriculture was doing 50% of our exports and it employed 30% of the population of Nigeria. Then you see that balance in that everyone is farming with a job, and that farming is bringing in forex, whereas exporting palm oil instead of just crude oil, that employs more people, adds more to the GDP, creates more jobs and more value addition than just crude oil that employs very, very tiny amount of money.
Yeah. I guess that drags back that issue of diversification, because you're talking of the value chain now. If we had developed a value chain, both for agriculture or even for crude, then we would have seen the country adding more value, and by the time we export it, we're talking of more effects into the country.
Very true. I mean, the Nigerian economy on GDP basis is diversified. So we've got agriculture, we've got trade, we've got telecoms, the 30%, all good. But when you split it into trade or into FX, that's when you see the divergence start up. I mean, crude oil is give or take 80 or 85% of our forex. There's no diversification there. You see the trade figures, 82% or the 2% for agriculture. So no diversification there as well. So this is the problem, that the largest sectors are not generating forex. And in Nigeria, because we import a lot, that forex is very, very important. Even when we trade, what are we trading in? Look at the numbers there. The largest import to Nigeria is finished goods. Then we're also importing agricultural goods. About nearly 60% of fish and agricultural goods, they make up that about 60% of the total import. So again, it goes back to what are we exporting? Crude oil. What are we bringing in finished goods? So no value addition locally, like you said.
Yeah, well, you know, when you talked about imports there, and yeah, we have the number of imports there. Even before we go to this manufactured goods, which we see, you know, very high right there, almost half of that. One very worrying news that I saw, I think that was last week or so, is food imports increased by 80% between 2019 and 2023. I know we're having this conversation before I came on air with my colleagues, and they were like, what are we importing? Can't we eat our gari made from cassava? And you know, it's really worrying that even our food, we keep talking of the shortage of FX, and yet we see increase in the desire of Nigerians to consume imported goods. Food, for this matter.
Well, there's no desire really to consume foreign rice. Just that foreign rice is cheaper. That's the problem. If you want to make rice in Nigeria, you need a mill. Mills need power supply. Mills need credit to operate those mills. But a mill in, say, the US or India or Thailand has a lower cost of production. So you can buy your rice in India, put it on a ship, bring it to Nigeria, pay insurance and freight, and at the port of Apapa, is cheaper than rice you have in Kebbi. That's the problem, that imported food, imported goods are cheaper. The only way you can get Nigeria to buy local stuff is if it's cheaper and if it's plentiful. Without imported food, Nigerians will not be able to eat. That's the reality. That's why we're importing so much. Not because we want to, it's more expensive, right, to get the dollar to import. But the foreign goods seem to be cheaper than the locally produced goods, but the cost of production in Nigeria is very, very high. We don't make enough, first of all, and then the balance, we have to bring the imports in just to meet our demand. Remember, we're on 200 million and we're going at 3%. The rice output in Nigeria simply cannot keep up with the population growth in Nigeria.
And yet we have the potential to all of that. We have the land, we have the weather, we have the human resources. In fact, if you look at the books, we have the policy to drive this.
Yeah, you're correct. I mean, the problem is the value chain. If you go to Benue State, we have more yams in Benue State than any part of the world. Nigeria is the largest producer of yams, largest producer of cassava. We do tomatoes, mangoes all across the country. The problem is the value chain to convert that yam to, say, yam chips in a bag that you can store for 24/7. You know, you go to Walmart in America, you have mangoes and bananas 24/7, 365. In Nigeria, we have mango season, corn season, they don't see it again. Because once it's out, you know, it's all over the place, it's surplus, the price falls. Once season is over, we're done. And then you struggle to find maize out of maize season. So the value chain is the problem. We don't have any cold storage chain. We don't have all those silos. We don't have cold blast that you can blast meat and keep it. And because of that, prices fluctuate. So during Christmas, prices always spike up because the demand goes up, but supply is really flat, but doesn't stay the same throughout the year. So it's the value chain investment that we're missing to then convert those record surplus, to store it, to process it in a manner that we can draw from those stocks when demand does go up.
Yeah, you know, it can really sound frustrating, even as a journalist. And I want to believe for people like you, television stations, radio, call you to come and discuss this thing, and we keep talking about the same thing. We know what we're supposed to do. We've talked about it. We've heard government officials talk about it. We've seen policies. We've had policy of the ease of doing business. We've had diversification from how many administration. And yet just implementing it's so difficult. And I'm wondering what's different with Nigeria. I mean, I went to Morocco October, and then you kind of see things working. You see the government say they're focusing on green energy. They have their car, which they will soon start exporting. And these countries do not have more potentials than Nigeria. But for Nigeria, the giant of Africa, just feeding ourselves in the midst of plenty is a challenge. It's sometimes really frustrating.
I hear you. I mean, I can give you many stories. Look at Indonesia came to Nigeria and got the palm oil seeds. I think it was 2021. They did 25 billion exports in palm oil alone. That's more than we did in crude oil. From the palm oil seeds they took from here back there. There are lots of antidotes that you can throw up that address the same issue. One problem, and just to give you a solution, one problem is that the way we have agriculture in Nigeria is too federal-led, right? We either have rural, very subsistence agriculture, and then we have the one or two mechanized. We have no middle layer where you have a 500-acre guy with one tractor or one combine harvester doing 500 acres. We don't have all that in Nigeria. It's very difficult and very expensive to do farming in Nigeria. Again, because the taxation, how we tax, it favors the federal government. The states have no business doing agriculture because if they have a farm, they get nothing from that farm. They don't tax incomes. They only tax the salaries of the workers on that farm. If you go back to the past in Nigeria, the pyramids with the granotes, those were owned by the regional governments, and they taxed and retained those revenues, just like crude oil. So there was an incentive for the states to invest in those pyramids of palm oil and rubber and cocoa, because they got a direct share of the income of those companies. Once we took that away and took it federal, then of course the states dropped any need to do agriculture and focus on crude oil and population, which is basically how you get money in Nigeria. So it's not structural, not just agriculture, the structure of revenue sharing has got to change to incentivize the states to focus more on agriculture that employs more people than, say, crude oil or banking or any other sector in Nigeria.
So does that link up to the conversation of restructuring, which I think the former, just immediate past administration, they had town halls and went to different states talking about restructuring? Is that the same restructuring of the structure you're talking about?
Yeah, it's a fiscal federalism to say if I make money in Kogi State, what happens to it? That's what we're talking about. Kogi has cassava. Kogi has a lot of soybeans there. Now, soybeans and cassava are needed by China. China can't get enough. And there's this issue with tension I have with the US. So if they come to Nigeria and they say, we want sorghum, we want soybeans, we want cassava, supply us, we won't be able to meet up. Now, federal can't do it alone. Kogi State has to go to the farmers and say farm. But why should Kogi waste his time? When if he does all that, the income goes to the federal government and is shared to all the states. But if Kogi State was retaining, even if it's 13% of whatever incomes from agriculture from Kogi State, then you'd see an incentive for the government of Kogi to grow agriculture because it's going to get the foreign currency income back to Kogi as derivation. Then you see a competition for every state to then export ginger or vegetables because they're going to get the derivation dollars back to them. Right now, if they do it, it goes to the federal, it's going to be shared like VAT. So the fiscal federalism is tied to agriculture. You've got to incentivize locals and state governments to invest in agriculture. And the more investment there is, then the prices start to come down and yields start to go up. So it's all tied together. You simply can't ask people to go farm without incentives.
Well, I hope President Bola Tinubu and his team are listening to this, and perhaps they could get one or two things from that. I'm talking about the president. We see that one thing his administration has been good with has been increasing crude production, even though that also points back to sustaining the current structure of more than 80% exports of crude, making up our trade, our exports. But at least we can say that will increase the revenue, and it seems is one thing we can applaud him for in his about 6 months in office.
Yeah, well, he has increased it, but it's almost like we had 100, then we took it to 0, then he increased it to 5. So yes, it's been increased to 5, but we're coming from 100. 2018, Nigeria was doing 2.2 million barrels per day. Right now, we're about 1.5. He took it from about 1.3 to 1.5. A big gap, big leap, right? So we get more for it. But Nigeria should be talking about 2 million barrels minimum, because at anything below that, you're not getting enough revenues in Nigeria. You've seen the numbers. The number one generator of forex in Nigeria is crude oil. Agriculture doesn't come close. So you don't spend time now chasing cocoa and rubber. You go straight to crude oil, get the forex in, and then use that income to then grow the value chain of agri. So even the budget is saying 1.7, the medium-term frame of 1.7, that's our target. We should be talking 2 million because anything below that, we really can't feed the population. That's 200 million people. And oil prices are not going to stay high forever. So kudos to them, but big picture, we are still below what we did in 2018, 2019 in terms of crude oil output. We can do more, and we should do more.
Yeah, we should do more, and that has not helped us when it comes to our FX and the value of Naira, which is where we started this conversation. And we've seen the Naira drop, from about 400. Now we know what it costs in the different markets, in spite of what the benchmark is in the 2024 budget. And I don't know, do you see where there's a booster coming in? We've heard of refineries coming up, God willing, by December, at least one of them. Yeah. Do you see a booster? Like, as the year comes to an end, first quarter of next year, do you see the Naira regaining some of its value?
The Naira is a derivative of Brent crude. So if Brent crude prices stay up and we get our output up, the Naira value would rise. It's that simple. We have to export the oil. So right now, the oil prices are up, but our exports are down of crude oil. So if we can if the price stay up and we export more, the Naira will gain value automatically. No magic there. Then we talk about things like foreign portfolio investments and remittances that can quickly come to Nigeria from Nigerians and also the guys that are going to buy bonds. That's the midterm to say, okay, can we attract that cash into Nigeria? That can happen if the Nigerian government starts to show trust and competence in managing resources. Right now, if you are a Nigerian living in Canada and you want to invest $1,000 into Nigerian bonds, what you're hearing is Nigerians are going to COP. Nigerians are buying SUVs. Nigerians are buying this. So you don't really trust the government's ability to invest your money. So you basically put that money in Canada or the US. So if there's trust in how the government can manage funds, they attract the medium-term FDIs, FPIs, and remittances. But the immediate thing that can drive the Naira to gain value is the exports of crude oil. Nothing else. The next 3 months, if you export more, the Naira gains value. If you don't export more, Naira isn't going to go anywhere. I want to talk about exports of agric. Leave that aside, that's 2%. Go after the big one, crude oil. Export more crude, the Naira gains value. It's really that simple.
Yeah, but it's not just crude, is it? If we export also finished goods, it can also contribute.
Just crude. Your numbers you share. So we are exports is crude oil by 82 or so.
Yes.
So by numbers, if you do 10% of 82, you're doing more than 100% of 2. So just focus. That's your numbers right there. Focus on crude oil. Just get that up by 10% from now to say January or February. You see the dollars coming. So it's a math equation now. You've got to go for what gives you the bigger bang for your buck. You can say you want to do manufactured goods 1.9%. If you grow that 100%, that's less than 5%. If you do 100% of manufactured goods or 100% of solid minerals. But just doing 10% of crude oil gives you that income boost in dollars. You can easily turn that tap. And it's not that we're not looking for crude oil. We already have the crude oil, but the pipes are being attacked by the thieves. So once you protect the pipes, you get the output up. It's not like, we're not drilling new oil wells. Get that point again. It's already there. It's just to protect the pipes and export more. Then we can increase our foreign reserves from crude oil. Remember, OPEC has already reduced the output. So that puts more pressure on us to do more condensate or to do more gas. So the clock is ticking. Very soon, crude oil is going to keep on coming down. China is already getting weak. So we have a very, very limited window to export as much as we can, to get as much dollars as we can into the economy in the short term. Medium term is going to be FPIs, remittances. Long term is FDIs, foreign direct investments. It has to go like that. Crude oil, FPI remittances, and then of course FDI. That's what boosts the Naira. There's no other way to do it.
All right, well, thank you for the hard truth. Mr. Kaluaja, certified financial educator, for sharing your thoughts with us. And we do hope that conversations such as this get to the right windows or corners and action is taken. Thank you for your time.
Thank you so much. Appreciate your time. All
right, let's take a break now. When we come back, AFEX is on.